If there's anything I like as much as stocks, it's real estate. So in some of my next few videos, we're going to talk about real estate. And one of the best ways to start investing in real estate is with real estate investment trust or a REIT. And one I recently bought was Digital Realty Trust. Shares of Digital Realty recently fell to near bear market territory. Digital Realty's results last year were weaker compared to the previous year, but the decline in the stock was much worse. On a sequential basis, revenue improved 3.7%. Core funds from operation was $465 million, up from $355 million in the previous year. Additionally, funds from operation was 8 cents better than expected, and the portfolio occupancy rate improved to over 90%. But the stock topped in the summer at over $160 per share and fell below $130 per share just a few weeks ago. So, what is an investor to do? Let's take a look. And once again, to begin with, I do own shares of Digital Realty. And for 2020, revenue improved nearly 22%. Core funds from operation, or FFO, which is an important metric for a REIT, totaled $1.7 billion. This was higher than the guidance given by the company, but was a 6.5% decrease. And the problem was a higher share count. More importantly, Digital Realty had new bookings of $130.3 million in the fourth quarter, which was the trust's second best quarterly booking. The average term lease is now over 8 years, and the trust attracted more than 120 new customers, and the company backlog has grown 17.5%. New acquisitions will allow Digital Realty to expand its foothold in Europe, the Middle East, and the African regions. The trust now has more than 88,000 cross connections, 700 connectivity providers, and 17 metro areas in Europe. In 2020, Digital Realty nearly doubled how many countries that it operates in. In the most recent quarter, more than half of new bookings were from outside of the Americas for the first time ever. Digital Realty has provided guidance for 2021. The trust expects revenues to increase 10.3% at mid-year. Core funds from operation are projected in the range of $6.40 to $6.50 per share, which is flat compared to the prior year. Digital Realty raised its dividend 3.6% for the current quarter, which is the 17th consecutive annual increase. As of today's close, Digital Realty's forward annualized dividend is 3.35%. So, let's take a look at the charts. And so today we're going to look at the key chart for Digital Realty Trust, and the symbol is DLR. And as you can see, it was doing fine here in this period all the way through 2020, and then it increased up through into the summer period, but then dropped off down to this portion here and seemed to have had a double bottom in this area here, and more recently in late February, early March, it went under $130 per share. Now, I've been watching Digital Realty for some time, and I did own it previously back here, but sold it. And I'm back in again. My prices are from about $128 to $137 per share. I may be in for the short, midterm, or long term. It all depends. But seeing this double bottom here, and that the fact that this bottom here is stronger as shown by the oscillators, I decided to go back in, given that I can sit and wait while I get paid that dividend. Moving down here, volume looks fine, but this is what was most interesting to me. We again had that double bottom, first time here and second time here. When we go through some of the oscillators, you'll see that this second dip is stronger. But I like to go into stocks when they show something like this, when they have a bottom here and then a move on up that gets reflected or rejected back on down, simply to shake out more investors, the weaker hands. I like going in on this second move. You can see here in the histogram that this was the first dip and this is the second dip. So as you can see, much stronger, a lot more improvement in this area here. You can see that improvement there in the price rate of change as well, that bottom, and now we're slingshotting up. And then moving down here into the relative strength, you get the same idea there. We're at a moderate 61.39 and more room to improve, but it's good enough for me. Also, the stochastics, once again, that dip here and this one here, much improvement, much stronger. Into the Williams, and you can see as well, once again, nice basing and bottoming here, with that dip being the maximum weakness, at least recently, and then this dip here being weak, but much stronger than previously. So the oscillators are saying there's a divergence. So I went in and bought. As I told you, I have a range because I like to go in early and then pick up shares now and then as I average on up. That's a typical scenario for myself. I am not necessarily encouraging you to buy Digital Realty Trust. The stock seems to be bipolar and can reverse action on a dime. So it may plunge back down here for no reason. Again, I'm going to hold in either for the short, mid, or long term. It all depends upon how the stock reacts. I think it's going to do well in the mid to long term. Short term, there could be some volatility. But for me, it's something that I like sitting on and getting paid while I sit and be patient. And for today, that's ChewDog Charts. Thank you.